Hi, everybody. This is Anna Granic, District Manager of the Canadian Federation of Independent Business. Today, we are lucky to be here with one of top experts in Canada in the field of pension plans for small business owners, JP Laporte. JP is the CEO of INTEGRIS Pension Management Corp and a pension lawyer. He's actually written extensively on pension matters and often gets called as an expert witness to the House of Commons. How amazing is that? Welcome. Thank you for being here, JP, and giving us your time. I'll be asking you some questions, and you'll be helping us understand more of what it is that you do and how it is that you can help our business owners. Are you ready for that?
I am ready.
Awesome. Okay, perfect. So question number one that I have is this. Can you tell us a little bit more about why you think business owners need to be made aware of how pension plans can be useful to them?
Yes, pension legislation in Canada typically was set up for very large companies, so not small business owners. However, in 1991, the law was changed, and it made it possible for small business owners to utilize the same legislation as large companies and to give business owners and their family members access to true pension plans with all of the tax advantages that comes with having a true pension plan. And that's why it's so important, because now it is possible for small business owners to enjoy sometimes 3 times the amount of tax assistance that you get when you're using an RRSP. So it's really, really important to learn these rules and see how the law can help the small business owner.
Okay, well, honestly, when I think of pension plans, I think of large companies and government workers. Never in my wildest dreams would I think of mom and pop stores. So the question is, how is it possible that a Canadian business owner can have true pension plans?
Yeah, it's because of the law was changed back in 1991, and it made it possible for a small business owner to utilize the legal framework to set up a personalized pension plan just for the owner and maybe family members that are on the payroll. It does not need to be offered to the other employees of the small business. So we discriminate and only make that available to the owners, the shareholders, and the family members that are working in the business. That's the key, is the law allows for that. And a lot of business owners still don't know. After 30 years, they still don't know.
Wow. Okay. Isn't it simpler, though, just to have an RRSP?
Well, it is simpler to have an RRSP. The problem is the RRSP only gives you 1 tax deduction annually, whereas with a pension plan, you can get 7 tax deductions. And some of these tax deductions are worth 3, 4, 5 times what you could put in an RRSP in a given year. So you can imagine the amount of taxes that you're not paying anymore, that you're putting towards your own retirement from your company into a tax sheltered plan. And that's why business owners should not be using RRSPs if they're eligible for a pension plan.
Right. Okay. So then what are there advantages to having the pension plan when you run a family business?
Oh my God, that's the perfect setting for a pension plan. Because you see, the problem with the RRSP, going back to what you were saying earlier, the RRSP, when you die, if you have a spouse, that money can roll over on a tax-free basis to the spouse, so the spouse doesn't have to pay tax. But if you both die at the same time, or if you don't have a spouse, right? Well, what happens is you have what's called a deemed disposition. What happens is that all the assets in your RRSP or your registered retirement income fund, your RRIF, get taxed. And so half the money disappears. And your kids, if you have kids, or your beneficiaries will get the other half. With a pension plan, if the kids are working in the family business and are therefore made members of the plan, when you die, instead of having a deemed disposition and half the money disappearing, none of it gets taxed. It just becomes pension surplus. And the kids, because they're also members of the plan, they now have the ability to pull on that surplus to fund their own pension. So the choice becomes, do you want to give half your money to the government, or do you want to give it to your kids?
Right. Okay. Right. Well, that's quite amazing, actually, to be honest. That's huge. That's huge.
Yeah, it could be millions of dollars. Could be millions of dollars saved.
Yeah, who knew, right? So what happens then to the cash in the pension plans when the owners retire?
Well, if you keep the plan alive, then every month, the pension plan, think of it as a kitty, is going to pay you a monthly benefit. But the rest of your money continues to grow tax sheltered for many, many years. So that pot just gets bigger and bigger. And then you get a stream of payments coming out of the plans, which replaces sort of the salary that you used to pull out of your business.
Right. Okay. Okay. The gift that keeps on giving. So what kind of investments are permitted to pension plans?
Well, they're much better than under an RRSP.
Really?
The reason, again, is legislative. So under the RRSP rules, the Income Tax Act has what are called the qualifying investments. So it's a laundry list of permissible investments like stocks and bonds in the stock market and stuff like that. But with a pension plan, we don't care about the qualifying investment rules. We have our own separate regulatory regime that determines what you're allowed to invest in. And those rules are a lot more permissive. So therefore, a pension plan could invest in real estate, private real estate, farmland. It could invest in units of limited partnerships in Australia or anywhere in the world, stuff that is not permitted to an RRSP. So in effect, what we're doing is we are mimicking what the most sophisticated institutional pension plans, the multi-billion-dollar pension plans you were talking about earlier,
Right.
we're mimicking what they're allowed to invest, and we're giving that access to our clients.
Shouldn't my accountant know about these solutions, JP?
Well, it takes time for new ideas to kind of take hold. And unfortunately, a lot of accountants aren't dealing with pension plans at all because they're helping small business owners. So they never come across pensions. They haven't had a chance to develop an expertise in it. So for them, if it's not part of their daily life, they're not going to volunteer and say, oh, you should do a pension plan.
Right.
That idea usually, not always, we have some very forward-thinking accountants, but usually comes from either the financial advisor, the financial planner, maybe the lawyer, if the lawyer knows about this stuff. So it's rare that the accountants are the ones that are promoting this.
Right, right. Okay. Last question, JP. Is there anything new in Ontario relating to the rules that govern these pension plans?
Oh, I'm so glad, Anna, that you asked this question, because the law has changed on December the 8th, 2020. So about 6 months ago.
Wow.
The provincial government introduced a bill, well, not introduced, passed the bill. It was called Bill 213, the Red Tape Reduction Act. And one of the many chapters of that bill dealt with pension plans for small business owners. And what the new rules say is that if you own your company, even partially, as long as you own 10% of the shares of your own company or family members, now when you set up one of these plans, there's no requirement to fund the plan. So if the company has a tough year, it doesn't need to contribute. There's no locking in. So if you need the money in an emergency, you can pull it out because it's not locked in anymore. There's no annual filings with the province and no annual fees that comes with the province. The province used to charge over $1,000 in annual fees just to register your plan and keep it regulated. That fee is gone.
Wow.
So the paperwork is, a lot of it has disappeared. The flexibility is as great as with an RRSP, except now you have either 3 or 4 times the amount of tax sheltering room that you could do with an RRSP. So I don't know what else can be done to help business owners in Ontario.
Listen, this has been incredible, amazing information that I know most of my audience doesn't have a clue. So I really, truly do appreciate that. Do you have any summary notes you'd like to add here before we finally say bye to everybody?
Just please take the time to learn about this. Whether you do it or not doesn't matter. At least you can make an informed decision, and you can't then be told later on, oh, well, you should have done this, because at least you were aware that this existed and you looked into it, you made your own decision, and then hopefully you'll make the right call.
Awesome. Well said. Thank you, JP, so much for your time. I appreciate the knowledge and the insight. For anyone else listening in, if you'd like more information and to connect with JP, I'll put that in the posting. So all the information will be there and you could contact him at any time. Thank you, everybody. Have a great day.
Bye-bye.